Good afternoon. This is Chris Brecher with the Simpler Options free video for March 14th, 2016. As you see, it's about 4 minutes after the bell. Today was all about a gap and go. Basically, people yesterday, when Draghi, the ECB, came out, people thought that he did a bazooka, threw out the bazooka. And that's why we had a big rally yesterday on the opening. Sold off when people thought that, no, it wasn't as bullish as we thought. And then they reevaluated. We went back up today. So what you got that was very significant in here is a test of the doji from yesterday. Now, what do I mean by that? Is we have two little forces that are very important. You have this doji from yesterday, which shows indecision. And it's always the key is how the price action is the day after the doji. Well, unfortunately, it closed exactly at the doji. So it didn't have to follow through completely yet. So Monday will be telling. Also in here, what you should see is we're right at the 200. Now the 200 hasn't affected it all these times. So I'm not sure it's going to be that big a deal yet. I'm watching more of this right here. That doji, and if there's a follow through on Monday. Very big deal. Next Wednesday, Yellen speaks. And then what I've been talking about, there are a lot of imbalances on Friday when you get some index rebalancing, which isn't at the end of the month. It's on the third Friday of the month on triple witching. So that's something we'll go over in a minute. Other thing I wanted to show you today with the gap today, this was like a gap and go. Now, what do I mean by that? Is you see the index is up 31, the NASDAQ up 69, the Russell up 22. This is what I find really fascinating. Put up not the ESs because that's a 24-hour chart. Put up the SPX. What I want you to see in here was this gap. So yesterday, the low was 1970. It closed at 1993. So that's 23 points. The low today was not 1995. The low was 2003. No doubt about it. I watched it like a hawk, so I know it. You add 23 to that and you get to 2026. We're almost there. It's amazing on how frustrating measuring gaps are. You never think they're really going to work, but then they do. Now, let me show you another one in Amazon if I can get Thinkorswim to work. Give me a second here. And as you see on here, look at Amazon. And I was showing people on the chat that there were two ways to look at this. One of them is this. You take the massive move, which is 547, to let's say 557. 10 points from the low, which is 562, gets you to 572. We're almost there. It's amazing on how these things work. Let's put it on a 5-minute. It gives you a better perspective. Take it back here and take right here 548 and take 558. Now, that's just approximate. And then take the low today, which is 562, right in this area, 563, and then you add 10 points. That's how you get to 573. It's not perfect, but the beauty of this, it kept you from getting caught short on the way up. Now, this is constructed. There's nothing in this that looks bad. So that's something very much you have to understand in there. Now, the other thing I wanted to mention in here is what does the market do now? Like I said, we're at a resistance area, a different kind of resistance area. I've been saying for a long time this is a resistance zone. So we're going to be watching on how the dojis act on Monday. We're also going to watch the NASDAQ, which I have showed you on here. And I'm going to unlink it so you can see it better. That the NASDAQ needed to catch up with the ESs. Why? Because they usually move together as a group. So look at the NASDAQ on the left. And it's under this. Look at this moving average. I use moving averages a lot as a relative term. Not whether they're support or resistance, but whether one index relative to another is out of whack. Look how this is right at its moving average like I discussed earlier and how the NASDAQ's under it. What this means is usually the NASDAQ stocks, the biggies, will kick in to get this index up to the level of the ESs. So what did we see today? We saw Apple act like a dog all day. And then what happens? And as you see on a daily, it just doesn't look bad. It just wouldn't go up today. And then what happens? It just starts to kick in. Here's this morning. Looks, won't go up, but the structure's okay. I had a small butterfly. I got out here and people were kidding me on the chat of, oh, it looks bad. I said, you got to be careful with this structure. Just get out, and when it looks bad again, we can get back in. Watch what it did on a 15-minute chart. One of these just slow like turns up here, and now here we go again. Measuring gap, that's $1.20 from the low, which is 101.50, gets you to 102.70. It's on its way. So the whole idea is these measuring gaps almost have done their objective. Then maybe we can look at a short idea. Now, one thing I want to bring up in here on the free video is I have a day trading class next Thursday called Day Trading for the Living. And the class is on March 17th from 6 to 8 p.m. Central. And then for an additional fee, you get 3 hours of watching me trade live and hope not to humiliate myself for 3 hours, right on the opening to 12:30 Central or 12:30 Eastern or 11:30 Central. As you see on here, it's a 2-hour class, is $97. With the live training is $197. We already have a lot of people sign up with no advertising yet. Just with people know me for word of mouth. It's amazing. I'm very flattered. But the whole reason I'm mentioning this, we're going to go over all the kinds of ways I day trade. And I wanted to show you one quickly of how I day trade. Take JCOM. One of my favorite trades is called a snap trade. What a snap trade is when a company has awful news. Citron yesterday said the stock's worth all of $20. One of my favorite trades is when a stock falls apart, closes almost on its low for the day. And if you see this yesterday, check this out. It closed almost at its low yesterday. I mean, not absolute, but close enough, within a point. That it only opens up because the overall market was so strong it pulled it up. And there was no new news to speak of that made it rally. One of my favorite things is then to short near the opening. Now, one thing I'm going to show you, and something I used to do to get myself hurt, is blindly sell on the opening. And then you get that next leg up and you get yourself stopped out. That's not how I do it. So put on the left, put a 5-minute chart. On the right, I want you to put a tick chart, a 133 tick, and this is how I trade it. When I teach how to trade, I combine my indicators, and I use these down here, the MACD 2-line a lot. I use these indicators, which are the moving averages, and I use the ATR trailing stop a tremendous amount. Now I'm going to take off the TTM squeeze and just minimize it, and this is how you trade JCOM today. In your old days, you sit here and you short it on the opening. That's not what I mean by a snap trade. I mean that this is a trade I'm looking for to short, but you have to wait for the triggers. Take off the 200. Take off the 99. Now I'm going to take these off so you can see them better. And you can even take off the 49. What I want you to concentrate on here is the moving average cross and the ATR trailing stop. The key on this, and this is just called a snap trade, it's just a short-term, ultra short-term trade to take advantage of carnage from the day before. So what you do in here is you don't short here, you don't short here, you wait for this cross. See that cross right there? Another tip off on here, the warning sign, right after the opening. Notice the negative divergence. These are the things I teach in the course. A negative divergence doesn't mean to short, but it's a warning sign. You always like to have 3 reasons to do a trade. What are my 3? Number 1, the carnage from the day before. Usually at least once during the day after a big sell-off, the stock will be down at least once during the day. That's one reason. 2 reasons, negative divergence. But this is the one that you could do, is the actionable trade where you want to do the where you want to initiate the trade. The cross right there. 59.5. You short it right here, and this is at 9.55. Look where it was at 10.15. There was no place in there to get yourself stopped out. You would have made 2.5 points in 15 minutes. Those are the type of things I show in there. I also show where to get out. 2 places. Gap fill. You could, when they cross the 9 EMA, when it crosses the 20 EMA, or when it has the ATR trailing stop cross. So at the minimum, you would have shorted here at 59.5 and then bought it down here at 57.5. At the maximum, you would have bought it at 57.8. But either way, you would have made at least $1.70. And if you look at this from 9:57 to 10:08, so it took you 20 minutes to make $1.57. Those are the type of things I'm going to teach in the class of how to take advantage of those opportunities and not to get in too early where then you get yourself in a defensive position. So I hope this helps with everybody. Here's the site for it again. I wanted to show you that. And let me put it up here. It's called Day Trading for a Living. Let me put it so you see it. Right there. Day Trading for a Living next Thursday. Live trading at Friday. Shows you all the indicators. And I like things simple. So it's a relatively simple indicators. I'm not trying to do some complex algorithms or measuring that are so complex you'll never be able to grasp it. These are real easy things. I like easy, and that's what I've done for 34 years, is try to find the high probability trades that are easy to be able to relay to people. So I hope to see you then. Like I said, you can register by this site right here. So everybody take care, and I will talk to you on Monday.